I mean, look, to me, I think Jensen laid out the strategic vision for the coming years. When we look at robotics, autonomous, I mean, I believe ultimately those are going to be some of the biggest use cases of AI. And I think what you saw from Nvidia last night is they're not just sort of going to be a provider. They're going to play a huge role in this sort of vision. And obviously, Tesla on the autonomous side continues to be front and center. I think this is the next step. I think this is a snapshot of the future. And you look at it incrementally, you go out the next few years, I think Street's underestimating growth by 25, 30%, which is why I think not just 4 trillion, you could be looking at a 5 trillion market cap.
Underestimating growth by 30%. What is it? Is it robotics? What's being underestimated, so to speak, in terms of the growth for this company?
I think one, it's Blackwell, which is overall from a demand perspective. We think 15-to-1 demand to supply in terms of what we see. I think when you look at robotics and autonomous, given the market opportunity, that could ultimately be 15, 20% of what I view as disruptive technology. I mean, that could be an incremental 20, 25% just to the top line over the next, call it 2-3 years. I think that to me was the sort of watershed moment last night. It's Jensen laying out Nvidia. It's not just about Blackwell chips, the new oil gold. It's about where this is all going. And we believe autonomous and robotics, that's a huge part of the fourth industrial revolution.
Right. So what does a ChatGPT moment in robotics look like then, Dan? What does that mean?
I think physical AI. I mean, we've talked about from Robotaxi Day in October. I think we're going to be looking next 2-3 years. Robotics is not just going to be from CES. It's going to be real. And I think it's something that's going to play out in factories. It's going to play out in consumers and households. And I think a year from now, we start to go more advanced prototypes to something that's going to become a reality. And I think that's the key here, is that we are still in the early days of the AI revolution. And there's only really one player. I mean, it's Nvidia's world. Everyone else is paying rent. That was a flex the muscles moment from The Godfather last night.
What about what I was just talking about, Dan, which is higher yields and the fact that all those stocks are down today? I know you're excited about the fundamentals and the innovation here, but does it make you question valuations when we are seeing a rate move like this on some of those ideas?
Yeah. No, look, and that's the push and pull, and I get it. But my view, Sarah, is that we have $2 trillion of AI capex next 3 years. And even when you look at tech, look at Microsoft just going to 80, from 44, basically doubling their capex. You look at numbers, you could say valuation, but I think it goes back to, I think earnings and ultimately top line growth for tech is being massively underestimated into the next year or two. And that's where the growth is. This revolution is not going to be stopped in a 10, 20-bit move on the 10-year.
Dan Ives poses a huge warning to all Nvidia holders about the recent sell-off that happened after China revealed DeepSeek. DeepSeek is shaking up the investment strategy of tech giants, casting doubts over U.S. companies' prospects in the AI arena. Companies like Nvidia find themselves at the heart of this storm, but Dan Ives thinks it is a trap as Nvidia is poised to explode very soon. Could Nvidia be poised for a rebound, or will DeepSeek rewrite the rules of the AI game? Let's delve deeper into this. Welcome back, everyone, to Investocracy.
All right, so with that in mind, are the doubts around the AI trade justified, or is today's sell-off just a buying opportunity for some of these names? Joining us for more is Dan Ives, the global head of technology research at Wedbush. Also here with us for the whole hour is Nancy Tengler, CEO and Chief Investment Officer at Laffer Tengler Investments. Thank you both for being here with us right now. Let's talk about, Dan, the epicenter of all of this. And you've been a notable bull on many of these companies, many of the technologies that are at the center of the meltdown today. Does this worry you?
I mean, in my view, it's a top 3 buying opportunity that I've seen in the last decade for tech. And the reason I'm saying that, I spent the whole weekend talking to tech executives, CIOs, individuals that I know that are going down the sort of AI arms race or going through use cases. In no way of really 25 companies does this change their sort of plans, and a lot of these could be 7, 8, even upper 8-figure type budgets. I just continue to view this as it's a model, and a lot of the details I think still need to be vetted out in terms of 6 million. Do they actually have the H100s, how they actually built it? But this is something we're going to look back on, and I think the street and the market got this way wrong. In no way does it dent our bull thesis. That's what we've been telling clients really since the weekend. These are the times you own these names.
Dan, not all of the companies at the center of the sell-off today are necessarily affected the same way. Mm-hmm. Chip stocks, Nvidia, Kelly mentioned it, $500 billion in market cap lost. That's more than the size of ExxonMobil. That's roughly the size of United Health Group in terms of an entire company lost in market value. Some are affected more than others. Mega cap technology, not as much so across the board as, say, Nvidia per se. When this is a buying opportunity, how much of a buying opportunity and how specific do you have to be?
Well, first on Nvidia, that continues to be, I think, the golden goose in terms of what Jensen and that company are ultimately. There is one chip in the world. There's one GPU that's fueling AI, and it's Nvidia. And when you think about these build-outs, when we talk about the enterprise, the $2 trillion of AI CapEx next 3 years, that doesn't change from DeepSeek. We're talking about 1/1000th of ultimately the build-out that you're going to need for a lot of these enterprise use cases. You look at names like Palantir, you look at the hyperscalers. I could argue with inferencing, if you actually think costs are coming down, it's actually bullish for even some of the software players, names like Salesforce, ServiceNow, Oracle, and others. I just think this is when you look at NVIDIA, I think we sit here 6, 9, 12 months from now and look at this as a moment. It was a golden buying opportunity, and in no way changes our bull thesis for where this is all headed.
As Wall Street watched with bated breath, analysts began to adjust their perspectives on Nvidia Corp in light of DeepSeek's sudden rise. Two of those analysts, Ivan Feinseth from Tigris Financial, alongside Dan Ives, made headlines by upgrading Nvidia's rating from buy to strong buy, also raising the price target from $170 to $220. Despite Nvidia's resilience, it's worth noting that DeepSeek's R1 AI model utilized Nvidia's less advanced chips, causing a temporary drop in stock value. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Meantime, Nvidia shares plunging 17% in yesterday's regular trading sessions, the biggest single-day market cap loss for a U.S. company. Joining us right now to talk about it is Chris Casso. He's Wolfe Research senior analyst. Chris, I think there's a lot of big questions that people describe this as a Sputnik moment. So let's just start there. Is it a Sputnik moment, and were you buying or selling yesterday?
Well, whether it's a Sputnik moment or not depends on, how the accuracy of the claims. And, I know you discussed that on the program, and I think that's the first place to start. And what, shocked people so much, and again, this news just didn't break over the weekend, it's been out for a while, is that they were able to provide, so much more efficiency in training as compared to OpenAI and everybody else that's doing it, and how are they able to do it in such a short span. DeepSeek couldn't have access to large clusters of NVIDIA's most advanced chips. So necessity is the mother of invention. But the question is, is everything in the white paper, 100% accurate? And, given the magnitude of the moves yesterday, that's a really important place to start.
Well, but Crystal, let's go there, because I'll give you my perspective. I'm not sure it has to be 100% accurate. Meaning, I think there could be. It may be that they trained off of 50,000 of NVIDIA's fastest chips, as Alex Wang said on our broadcast last week. It is possible that they are using and leveraging Llama and other open source services. It's possible, by the way, that they're scraping and leveraging things even like OpenAI and other sort of closed frontier. Maybe they're doing all of these things to get to this point. But I think the point is that they got to this point, and they got to it clearly with less energy than everybody else did. And ostensibly, for those who actually have now read through the code and understand it, they would tell you that you can start to build off of this in a much more efficient way than you could before.
Right. And that's an important point going forward. And, really the question here is, is the world going to need as much compute going forward as we thought, a week ago? And, at the very least, when you look at the announcements over the last week, SoftBank and such, 500 billion, the Meta comments, upwards of 60 billion or so. The big AI players in the U.S. are still planning on spending right now. And I don't get a sense that they're reassessing that just today.
Analysts emphasize that continuous investment in AI and data centers will be critical, with predictions that capital expenditures for AI-driven projects could swell from under $250 billion in 2024 to more than $400 billion next year. Interestingly, D.A. Davidson analyst Gil Luria offers a cautious viewpoint, maintaining a hold rating on Nvidia with a target of $135. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
That's interesting. So you think if there was a meeting yesterday inside of Microsoft, inside of a Google, inside, you name the company, and they said, our spending plans, again, what is that conversation? Is that conversation not that they're, and by the way, it's not clear to me that they have to basically say, we're not spending $80 billion tomorrow, right? That we've already signed that. I think the question is more in their planning meeting in 2026 and 27, are they planning to spend another $80 billion in 29 and 30 and 31 the same way, right? That becomes the fundamental question. Right.
And at least what you could say thus far, and I wasn't party to any of those meetings they had, if they had meetings yesterday, it's a bit of a space race, right? So, what one of the things NVIDIA said for a while is that, nobody wants to be, the second model that comes out. That there's a big question about, time to market. The reason why OpenAI is in the position where it is because ChatGPT came on the scene before anybody else, and it was pretty good. And you go from there. We're now in reasoning models, right? So that's kind of the next frontier, and moving the ball forward on that is really important. I still get the sense, and I think that's probably over the next 1 or 2 years, that each one of these large companies is still going to want to be on the forefront. Mm-hmm. If you figure out a way to do it more cheaply, well, of course you're going to do that, and so that goes without saying. But I still don't think, given the stakes in AI, that anybody is going to want to slow down and say, you know what, I can save myself a ton of money and I can be number 3 in the market. That doesn't seem to be where people's heads are. I hear you.
I just don't know if it's an order of magnitude. We got to go, but I just don't know enough about whether it's orders of magnitude less, meaning it's not just I want to spend less money. It's that I don't even have to spend as much money and I can get the same output or even better, right? That's, I think, the fundamental question, and we still don't have answers on it. But Chris,
and I'll tell you that there's a place we'll find out the NVIDIA GTC event in March. That's the AI event. Everybody's there. There's a big keynote by Jensen. Absolutely, positively, we're going to hear more about it then.
Despite a temporary downturn triggered by DeepSeek's entrance, analysts like Ivan Feinseth and Dan Ives view it as a golden opportunity for potential investors to reevaluate NVIDIA's long-term prospects. As AI investments are expected to skyrocket beyond $400 billion, NVIDIA's role as a primary supplier of GPUs signifies robust growth potential. But what are your thoughts on NVIDIA's trajectory in the AI race? Will new entrants like DeepSeek redefine the landscape entirely? Share your perspective. Finally, if you would like to know what companies like NVIDIA have been up to these past few days, go ahead and click on the next video on your screen. See you there.